Hey everyone, Jeff Dorman back with another edition of That's Our Two Satoshis Live. For those new, this is our version of going through what we thought was happening in the digital asset market this week. For those who want to read it rather than listen or both, you can always go to our website at ar.ca/blog and find the latest That's Our Two Satoshis. So I titled this week's article, My Bank Forced Me to Use DeFi. And I'm going to get into exactly what happened and why I was forced to use DeFi because traditional banking failed me. But before I do, let's just talk about the markets last week. We've been talking for a couple of weeks now. It's been kind of listless, kind of boring, maybe one or two differentiators every week. And for the most part, market's not really doing anything. Same thing last week. But what I thought was probably most interesting was if you look at the year-to-date returns, I've been on record, I don't think Bitcoin is the market. I think it's just one asset in the market. But a lot of people still use Bitcoin and Ethereum as a proxy for the market. So if you look at the year-to-date returns going into this weekend, you essentially had Bitcoin down about 14%, Ethereum down about 18%. And you compare that with the NASDAQ, which was also down 18%, or government bonds in the long end on the 20-year and 30-year down 19%. Or you look at emerging market equities down 14%. European equities down 16%. The point I'm making here is it's all kind of moved together, right? Whether it was stocks, bonds, across emerging markets, tech, et cetera, digital assets, all moving in the same direction down this year, kind of nowhere to hide. But that's not what's interesting to me. What's interesting to me is that if you look back at the last 3 years, digital assets have undoubtedly been the best asset class, right? We have outperformed every other asset class for each of the last 3 years. And yet, for the first time, now that things are going the other way, we're also outperforming. That's really important. I know right now investors are hiding in cash and even shorting the market, across all asset classes. Nobody really wants to have a high risk tolerance right now. But this is called high up capture and low down capture. Up capture is essentially how much of the upside are you capturing, and down capture, exactly the opposite. How much of that downside are you capturing? This is exactly what institutional investors look for all the time. They want something that captures most of the upside, if not all of it, but protects you from the downside. That's why hedge funds exist, right? If you look at a long short equity hedge fund or a credit opportunity hedge fund, every one of their pitch decks says, we'll keep pace with the upside, but we'll only capture 50% of the downside. And of course, in practice, most of them don't. And that's why hedge funds have been underperforming both the upside and the downside for most of the last 10 to 15 years. But if you just look at digital assets as a whole right now, they're effectively showing off the same characteristics that institutional investors are looking for all the time, which is, can I capture most or more of the upside and capture less of the downside? The fact that that's happening right now is a huge, huge win for digital asset investing. And it's going to lead to an insane amount of inflows over the next 10 to 20 years when institutional investors look at what the characteristics of this asset class are giving us. So even though the market's down, even though it's not a great trading environment, hang your hat on the fact that we are performing less bad than other asset classes, while of course outperforming massively during times of prosperity. All right, but let's move on to what I wrote about this week, which is my bank forced me into DeFi. So I almost never do this, but I'm going to tell an anecdotal story about an experience I had related to the banking system and DeFi. To start with, there's no secret, DeFi growth has been somewhat stagnant over the last 6 months. If you just look at things like on DeFi Llama or DeFi Pulse in terms of TVL, we know activity has slowed down. We know lending rates are down. There's been a constant flow of hacks. Certainly DeFi tokens, if you're an investor just in the tokens, those have not performed well over the last 12 months. I get all that. The media has been trying to kill DeFi for years. Everyone's excited about dancing on its grave. All valid reasons to be concerned about DeFi, sure. But what's happening under the surface is anybody who actually uses it is still getting a great experience. And here's what happened to me last week. So on April 6th, I went into Coinbase and I looked to deposit some money from my bank into Coinbase to buy some ETH. I've done this multiple times, never had a problem with it before. Coinbase has a nice service that allows you to spend the money before it clears from your bank, right? Basically trusting that the bank's money will be there and you can spend it before it gets there. This is on April 6th. I bought the ETH, no problem. Didn't think twice about it. Was going to hold it probably for 2 or 3 years. On April 14th, I got an email from Coinbase. This is now 8 days later, saying my bank transfer never went through and that I need to deposit money in there in order to satisfy basically the loan that Coinbase gave me to buy the ETH. Okay, didn't think much of it. Logged into my bank account to see that the payment never went through, so I reinitiated it on April 15th. No problem. Assumed the money would get there. On April 20th, once again, told by Coinbase, hey, the money never went through. You now have 24 hours to get the money in there or they're going to liquidate the ETH that I had bought. And the ETH that I had bought was down about 10%. Obviously, I had no real interest in being liquidated down 10% for no reason. So I call my bank. I'm like, hey, what's going on? This is ridiculous. It's been 14 days. Why are you not letting this go through? What I found out in this process was that my bank account was frozen. It took me about 5 interdepartmental transfers on the phone, 4 hours on the phone altogether. I was disconnected 3 times, basically before they told me that my account was frozen and that it would take at least 48 hours before I would get any word as to why my account was frozen. So, if you're doing the math here, it's been now 14 days of me having no idea and my bank not even telling me that my assets were frozen. Meanwhile, I got a bind here, right? I got to get money into Coinbase before I get liquidated. So immediately turned to DeFi. Sent some ETH that I held elsewhere out of a cold storage wallet into my MetaMask wallet. Went to Aave, deposited ETH at 2 times collateral into Aave, borrowed the amount of USDC that I needed in order to satisfy the money that was owed to Coinbase. Took the USDC, paid, I think, 3.6% annual rate on the amount that I'm borrowing through Aave. Immediately went to Nexus Mutual, bought some insurance, paid a 2.6% annual rate on a 30-day Nexus Mutual purchase to ensure the amount of money that I put on Aave. Sent the USDC to Coinbase. I think in total, it took about 15 minutes to solve this problem through DeFi. So, my bank apparently thinks that I am engaging in some sort of an illicit activity and freezes my account, even though it's clear that I'm doing nothing other than transferring money into Coinbase, which is a U.S. publicly traded company, who, by the way, is also banked and traded by Citibank. So Coinbase is a customer and a product of Citi, yet my assets are frozen. So here's what's going on here, right? I think we've all heard about problems with the banking system. I've written about it multiple times as well, that I think February and March 2022 are going to be turning points in terms of digital asset adoption, because all the nonsense that's happened with Canada and its citizens and Russia and its citizens and, the US and Europe putting sanctions on Russians. I've been on record many times. I think this is going to be a turning point where we're going to look back on this a year from now, 2 years from now, and say, it is crazy that when you put money into a bank, it's not actually yours, that you are still reliant on somebody making a decision to allow you to access your own money. But it doesn't really hit home until it happens to you. When it does, you realize not only is this crazy, but there are much better solutions out there. And here's the backstory to make it even more ridiculous. Why did I even have a Citibank account in the first place? Well, I recently bought a house. I have no assets at Citibank, don't even have an account at Citibank, but Citibank wanted to issue me my mortgage. They begged me basically to take out a mortgage through Citi. And in order to do that, I had to open up a Citi account and deposit some money in there. And if I did that, they would give me a better mortgage rate. So Citi is basically begging for my business, begging me to transfer money in there. All of this happens with no problem. And I was able to make a handful of transactions in my new checking account, including paying US taxes, including paying down a credit card I have that has that Citi has issued. Again, no problem. But the second I tried to do anything related to digital assets by transferring money to Coinbase, they now flag my account and say that I'm doing something illicit. This is the definition of Hotel California, right? You can check out, but you can never leave. Citi has determined that my money in my bank account that they had no problem letting me put in there is not actually mine. It's theirs, and it's their decision whether or not I get to access it. I think when you think about what is happening around the world, and how, my parents' generation, their parents' generation just trusted banks and governments versus what we have today with this lack of trust. It's pretty clear what direction we're heading into, right? We are heading into a system where, even though right now we are all still reliant on the banking system, right? We need to pay our bills, we need to get our paychecks. It's not going to last. We are moving away from that. And while Citi wants to pretend that I did something fraudulent, to me, the only actual fraudulent activity right now is that Citi is trying to steal my money for absolutely no reason. I hope this story gets out there. I hope people share this with their friends and family. I hope people say, hey, maybe it hasn't happened to you yet, but it's probably going to. The chief investment officer at Arca, which is a US-based company and a US taxpayer who runs hedge funds that are here in the US, that is engaged in multiple activities here in the US that are all above board, that this person has lost access to his banking account simply for making a transaction into Coinbase. The more of these stories that get out there, the more people are going to actually start to use digital assets and not just talk about them. And I want to highlight one other thing that I put in the blog, and I hope people share this as well. Joe Weisenthal, a reporter at Bloomberg, who is known to be pretty antagonistic, right? I'm not even sure he cares about what he says as long as it rubs both sides the wrong way. But this morning, he came out with his blog and says, crypto breaks a lot of people's brains in part, I think, because it's so backwards. There's so much money in it, but nothing actually delivers so far. I think that's an insane statement, right? That is the kind of statement that you make if you've actually never interacted with a Web3 protocol or with a DeFi protocol. The fact that these are the people who are out there in the media telling the stories about how crypto doesn't do anything. Meanwhile, there's plenty of real world examples just like mine where not only does it do something, but it actually was a savior in a time of I'm not going to use the word crisis, but in a time of need. DeFi came through and solved the problem for me. So again, I would love for people to share this article that we wrote. I would love for people to share the Twitter Live. Get these stories out there. Let people show that, hey, don't be afraid of using one of these applications. It's easy. It works. It's actually far better than the traditional banking system. And the more we get that out there, the better it'll be. So I appreciate everyone's time. I hope this really does resonate with people. I hope others have similar stories. Would love to hear about them. Share it on Twitter. I'm at JDorman. You can obviously follow us at ARCA at ARCA. You can get to our blog, ar.ca/blog. But get these stories out there. Let people start interacting with DeFi, using it, and stop letting the media perpetuate this nonsense that digital assets don't do anything and that DeFi doesn't work and that this banking system is so pristine. So that's it for this week. Hope to see higher prices and a more healthy environment next week. Thanks for listening, everyone.